GM, welcome to the weekly outlook. Today we're going to dive into the liquidity crisis that we're seeing affect Bitcoin and crypto. It's the reason they're not at all-time highs, whilst gold and stocks are. And from that, we can dive into the Bitcoin bottom signals to watch. And we'll follow that up with the leverage positioning and catalysts and risk as always. So let's dive into it. High time frame market analysis, looking at BTC, gold, and the S&P 500. So on the monthly chart here, what we can see is this vertical line from March 2024, where all three of these assets broke out. Stocks actually broke out a month earlier, but otherwise they all broke out from their respective high at this exact moment. All three assets were trending upwards, and technically so far that trend is still intact on Bitcoin. Yes, you're seeing it correct and pull back while gold goes parabolic, whilst stocks go parabolic, but we have actually seen a period in the markets where all three of these assets have gone up and to the right together. Whereas, in 2020, if we look at this, you had Bitcoin going up, you had stocks going up, but gold really didn't go anywhere. So you look at this period from over here to essentially over here, that was gold's price action. But at the same time, you had Bitcoin in that period having an entire bull market. You had stocks in that period having an entire bull market. Let's pull it from exact same place. So that was here to here. Again, trending up while gold was actually correcting downwards. So the assets are all on different cause and effect paths. The reason gold's the best performing asset of 2025 and going into the start of 2026 here is because of cause and effect. Gold underperformed in last bull market. Because it underperformed, the long positioning got heavy into Bitcoin, heavy into stocks, and not so heavy into gold. And if there's too many longs on Bitcoin, too many longs on stocks, who's going to push the price up? Whereas on gold, there wasn't too many longs, so it's much easier to push the price up. Smart money can buy at the beginning, and then eventually retail will start buying at the end. Whereas in stocks and Bitcoin, you have a bit of retail already present, so you're already starting from that higher level, which means there's less upside to go. Markets move based on positioning, based on cause and effect. So that explains why gold has been going parabolic. So what do we need to see? Well, one scenario is for Bitcoin to actually have its call-off period. And maybe that is what we're going to go into. Maybe Bitcoin is going to have a period of underperformance over the next few years where we go sideways between this overall range. This is just one possibility. Obviously, many ways this can play out. You guys know that by now. Before breaking out higher. Point is this going to happen? Not necessarily, and almost certainly this path is not going to play out. But the point is that cause and effect, if we do see Bitcoin underperforming stocks, underperforming gold for the next year, maybe even next few years, who knows, guys? Got to be prepared for everything. I know that might not sound like what you want to hear, but that almost makes it something that you then have to really take seriously and prepare for because of that. Bitcoin underperforms. That gets me excited because then you're looking at Bitcoin being in that gold scenario where long positioning actually starts leaving Bitcoin and chases gold, chases stocks. And what I know then, when Bitcoin eventually breaks out, sentiment's going to be awful. And that's what can lead to your lovely moves that gold's having right now. Remember, gold during this period was absolutely clowned on. Peter Schiff was getting absolutely mocked because Bitcoin was mooning, stocks were mooning, and gold was going nowhere. All of a sudden, everyone's saying, wow, look how amazing metals are. Guys, we've got to be in for the next metal bull run. The next metal super cycle's here. Everyone says that over here now that it's marked up massively. No one was saying that when it was going sideways and as actually building a cause, building its accumulation, which is what precedes the parabolic moves. So that's what I'd be looking at on Bitcoin. That's one scenario. Could Bitcoin be underperforming for the next couple years? Who knows how long it's going to be? If so, that's going to wipe out the long positioning. Many ways it can underperform, though. Of course, it doesn't have to stay in that box. You can also see the same thing with a downwards lean where you actually correct in this fashion. That would be the same thing, just having another stab lower at that 70K region. Again, another possibility, and maybe this is something you can even drag lower as well. Again, another possibility. Just depends how much positioning still needs to be wiped on the long side. And there's two ways to capitulate a market and bottom a market. The first way I showed you was a time-based capitulation, where you go sideways for long enough that you churn the positions out, you churn retail out, and that's when the positioning favors upside. Or price-based capitulation, where you go low enough to the point where retail are forced out or just simply exit, have no interest in the market, and that's another way to bottom it out. Two ways. People generally don't talk about the time-based one, they only talk about this one. But gold, as it went sideways here, it wasn't crashing, but this was a bear market, because all the bear market is underperformance. Yet it stayed in this range. It was a time-based capitulation. It was a lengthy period between 2020 to 2024, so 4 years. I mean, could happen. Who knows? Maybe Bitcoin underperforms for 4 years before outperforming. You have to be prepared for all of these scenarios. Me, as a long-term holder, I have a percentage of my portfolio that is looking to maximize the amount of Bitcoin I own long-term, as do I think many of you should do that. Because what happens here in these periods when it underperforms is everyone checks out. During 2022, I remember I was around at the bottom when FTX was crashing. Everyone had checked out of the market. And even when we was going into 2023, markets were so boring. Barely anything was moving, no volatility, nothing was tradable. And all I knew was just stay in. Stay active every day. Stay interested. Because if I stay interested during these periods, that's when opportunities typically at this maximum. And of course, in hindsight now, it was. You can see that. But people get churned out during either the price-based or the time-based capitulations that you see here on Bitcoin and gold. That's when retail exit. That's when people lose interest, and that's when the long positioning gets wiped, and when it's actually then poised to get ready for its next big move. So you've always got to be staying active in the markets. The opportunity favors those who stick around. I can't stress that enough. So make sure you do stick around. You don't check out. Views across the board around crypto are all lower. You can see that everywhere. Retail are checking out, so you're already doing good staying here. So stick with me. Make sure you're along for the ride, and smash a like, smash a comment if you are along for the ride with me. I don't care how long this chart takes. I believe Bitcoin's going to 200, 500, 1 million per coin. It's just a matter of time. And if you have that conviction, then everything else is just volatility in between. Who cares if it goes to 70, 60, 50, or if it stays between 80 and 100 for the next few years? Doesn't matter. Who cares? That's the conviction you have to have with your long-term bags. That's the conviction you have to have on gold. Oh, easy to be a gold bull right now. Easy to say gold's so amazing. It was so obvious. Yeah, so obvious. But was it obvious when it was going sideways here and Bitcoin and alt season was about? Everyone was saying XRP is going to the moon. Wasn't so obvious there though, was it? So it's just a lesson there of how you have to stick around during those underperformance periods, which we're currently in right now on Bitcoin. Got to call the chart for what it is. The caveat to that, as I said at the beginning, was we actually are still in an uptrend. Monthly structure is actually still intact, so 82K is a really key level for me going into the weeks ahead. Do we actually hold that monthly structure? Because potentially if we hold that, all three assets are still moving up and to the right at the same time. Yes, Bitcoin's having more of a pullback and has lost more momentum, but it still has kept that monthly structure. And potentially you could see that structure hold. So a different scenario could be, if it's not going to be such a violent underperformance, and we're actually just going to build a base before breaking out, then what you can see there is in the same scenario, that's probably when you're going to see actually just a small call off in gold. Maybe that's one of these consolidations where it's just sideways in some sort of box. See potentially a small call off in the stock market, nothing major. And during those periods, they're all still going up and to the right, but cause and effect paths. This is when they go into a bullish consolidation on these assets, and that allows Bitcoin some breathing room to actually have a move up. So that's another way this can play out. And overall, what you'd be waiting for is On the lower time frame, so if we go to the weekly now, what you'd want to see is whenever this chart on gold, on stocks, has a down move, like this, so in this path scenario, that would be a 5% down move, and to the next low would be an 8% down move. So it would be pretty big, and this can come from higher, and it probably does. And if that does happen, what you want to see is, does Bitcoin outperform to the downside while stocks are having that move lower? Can Bitcoin hold the same structures that stocks are perhaps breaking? And let me actually draw this out in a way that is going to make a little bit more sense. So watch the stock chart in the bottom right. Let's say Bitcoin generally chops and moves up with it, and then stocks pull back. Bitcoin has an initial pullback, and then stocks kind of have that bounce. Bitcoin makes a new high. And then let's say Bitcoin does something like this, where it actually is creating a higher low over here. So let me get the pen. Bitcoin's creating a higher low, while stocks are actually creating a lower low. And it's not going to necessarily look exactly like that. Maybe it's more of just a sweep, and we see stocks actually go for more of a proper leg lower, just like we saw during the tariff sell-off over here, where we had stocks really downtrending during this period. So if you watch the cursor on Bitcoin on the left, stocks on the right, notice how Bitcoin was going sideways during this period while stocks were actually plummeting down. That's what you're looking for. That's the bottom signal on Bitcoin when it starts outperforming these assets. When it starts outperforming to the downside in particular, that's when you're seeing that the long positioning is no longer there to get wiped as aggressively as it is in stocks. And that shows you that positioning is actually more ready for Bitcoin to then go up, just like it did during the tariffs, as I said. Bitcoin was just so much more poised to go up because it was failing to go lower as aggressively. And that just means there's less longs to wipe out. And again, markets move based on positioning. There's only so much liquidity to go around between these assets, and that's the liquidity crisis right now. You've got these three huge global assets. Only so much money flowing around. Printers aren't going crazy burr yet like they were in 2020, and that probably doesn't happen. That's probably once in a decade thing. It's a trader's market now. You have to learn the skill of trading. It's never been more important. The skill of actively managing your wealth to make sure you can benefit during those sideways period if we do go into that. Because cause and effect, liquidity suggests that these assets can't all moon at exactly the same time. It's just not possible. Just not enough money flowing around. But when gold goes sideways, that allows Bitcoin to go parabolic. That allows stocks to have a nice breakout. And then when Bitcoin is now going sideways, well, that allows gold to go parabolic. That allows stocks to go parabolic. You kind of have two assets going at a time at once. And you never really have all three going at once. You had a brief period in 2024, which was beautiful, but that's when Bitcoin really just started distributing. You know, when Trump got inaugurated, distribution bumped us down. And then Sailor, all of those Bitcoin vehicle companies, ETH going to all-time high, all of those top signals, boom, plumped us down. Another distribution, while these assets just trended higher. So it's cause and effect. That's what I'm really looking for on the high time frame. And if we look at something like some simple EMA bands, can do some further analysis. So let's actually get the 12 and 21 bands, and on stocks and gold, let's get the same one. So let's get those 12 and 21 bands on here. Boom. And as we can see on the monthly, those bands are getting front ran on gold. Stocks on those huge crashes, like the tariff sell-off, kind of wick into them. Bitcoin's trying to hold on to its bands. They've produced new highs each time. So it's interesting to see, do these bands actually also hold on Bitcoin and stay respected, or do they go red? That's another sign I'm watching for. So price action wise, you kind of got those two scenarios, either time-based or price-based capitulation on Bitcoin. We have to go to the weekly to really look at what's being respected on the likes of gold and stock. So what's going to be the sign of gold slowing down that's going to allow Bitcoin to essentially go on its up move? That's what we're looking for, right? That's what we care about. We want to see the period when gold actually starts disrespecting these weekly bands. They start going red, then it starts going sideways. That's what leads to Bitcoin having its 2020 bull run, guys. That's the signal. But at the moment, Bitcoin just can't do it while gold's just going parabolic. We need some sort of cool down where those bands start to catch up with price and maybe get disrespected a little bit. That's going to be your best sign. You start getting some deviations below the bands, but right now you're not seeing that. You're seeing bands hold, lead to new highs. Bands get front ran, lead to new highs. Bands hold, lead to new highs. Bands hold, lead to new highs. This is a parabolic trend at the moment in metals. Got to call it for what it is. So the first sign is going to be losing those weekly bands that are clearly being respected to show that Bitcoin can maybe have some outperformance again. And it's a similar story on stocks. You've also got those weekly bands. They're being supported. They're leading to new highs. When do they next go red? Because when they last went red, Bitcoin bottomed out, outperformed stocks to the downside, and had the first move up. That's what you want to see again, right? You want to see these bands actually get disrespected, whether it's from here or whether it's actually from higher. And disrespect can just be price going sideways. A lot of people just think it has to mean we're going to zero. No, it doesn't. Stocks can cool off by going sideways. That's going to give a lot of pain to a lot of traders because they don't know what to do. Investors don't know what to do if it's going sideways. They flip-flop, they sell at the lows, buy at the highs, get bullish when price is moving up, saying it's going to break out, and then of course it doesn't. It has another dip to liquidate the longs. This churns positions. This is why markets go sideways, to reset. And if you see those bands getting disrespected with the deviations below them, that's again going to potentially allow Bitcoin to outperform, especially if you do see it outperforming to the downside, as I mentioned. So that's what you're really looking for liquidity-wise on Bitcoin. At the moment, Bitcoin's bands are red. So Bitcoin's the underperforming one, which is why stocks and gold are the outperforming ones. Because remember, only three can really run at the same time, as we've seen previously by looking at history. Just not enough liquidity to go around, especially when silver, other metals are going crazy, AI is going crazy. There's so much liquidity flowing elsewhere other than Bitcoin. America, the US, Trump administration have a clear agenda to pump as much money as possible into AI, energy, and defense. Bitcoin's not really a part of that, guys, and it just is what it is until that changes. And we just have to accept that. Bitcoin's void of a catalyst right now. That's really the price action we're seeing. We're seeing a stock market full of catalysts, a metals market full of catalysts with all these conflicts going on. You've got Venezuela, you've got potential conflicts in Iran, you've got debasement worldwide, you've got to move away from the US with some of those tariff panics, and you've got globally China, Russia trying to de-dollarize, and to do that, they go into metals because they also print the crap out of their currencies too. Their currencies ain't great. A lot of people talk about BRICS and all the fear around that. Their currencies aren't so good either. That's why you see metals doing so well. It's not really been money printing and 2020 COVID debasement. You don't see that. That's not why metals rising right now. It's not why stocks are rising. It's the investment that's pouring into the markets and the de-dollarization that's going on through nations. Bitcoin just doesn't have that narrative, and it did have the ETF flows. January 2024 when they launched over here. That's why Bitcoin went crazy. It was the institutional trade for Bitcoin, but that's over now. Bitcoin needs something new. It needs a new reason to rise. Markets, obviously, price first, price rises first, and then the narrative follows, but catalysts are definitely a real thing. And markets price in the future, and they price in future catalysts and future expectations. And right now, the future expectations are just more absent in Bitcoin and especially crypto. When I go on to show kind of the wider market, look at the total crypto market cap, you also see that evidently here as total market cap actually has dipped below the 2021 all-time high. So you see, when you bring in altcoins and the rest of crypto, it's way weaker than Bitcoin for starters, because Bitcoin's not tapped 69K to 2021 high. That tells you Bitcoin's the reason this chart has gone up, and there's been the reason for its performance to the upside, since the rest of the market's really doing the work to pull it to the downside. So shows you what market you're in the crypto market. It's a Bitcoin market. That's all we care about is Bitcoin on the high time frame. Altcoins are for trading and for stacking more Bitcoin. Don't hate the messenger. That's just the game. That's just what the markets are telling us. I'll give you guys the real deal. Not looking for clicks, so I'm always going to tell you how it is. And when you look at the altcoin charts, well, yeah, it's just incomparable to stocks and gold. They didn't even break out from their 2021 all-time high on the total 3 chart. It's just a complete failure. There's not much more to say to that other than these are not trending at all this cycle, while gold's gone parabolic trending, stocks gone parabolic trending, and even Bitcoin, as I said, has had a breakout trend. There's just not been a narrative for altcoins like there was in 2020, 2021, because that was the blockchain era. That was when blockchain was the new hot technology on the block. AI wasn't hot back then. All the devs, all the engineers were going into blockchain because what if it does revolutionize the financial industry? What if markets rise based on what ifs, pricing in the future expectations, as I said, and what if crypto decentralizes real estate? What if XRP revolutionizes the banks? What if Chainlink is used in all companies? What if all of these questions were there on Bitcoin, on crypto? Everyone was talking about all of the apps, all of the gaming that's going to be built on blockchain. And was it going to happen? Did people know it was going to happen? No, no one knew whether it was going to happen or not. But the chance that it could happen was the reason markets rose so much. But that chance has been eradicated. No one believes blockchain gaming's going anywhere because apps are just so much better on Web 2. No one believes real estate's getting put on the blockchain because you can buy partial shares of real estates on ETFs. You can also just live in a normal bloody house instead of on some crazy NFT. Like, no one believes that anymore. You don't have the future pricing of expectations. And it's actually very amazing how well crypto's performed considering none of that is believed anymore. And really, of course, we saw meme coins rise, financial nihilism. Crypto turned into the casino. Instead of being serious, what popped off this cycle was your memes, everything on Solana. Yes, you had some crypto AI runs at the beginning. I will give a shout out to them. Made a bunch of money on them. But, you really had the meme coins rising and study financial nihilism. It's not a good thing. It's not the way to make money. And the new generations, they're really going down that route of financial nihilism, kind of giving up with the world and saying, if the system's against me, if I can never afford a home, why don't I just gamble? Because I'm not going to have a chance anyway. And that's a loser mentality. And when we actually have more and more of the generation thinking like that, if you can outwork them, it's the easiest time ever. But rant aside, won't get on talking business. I keep this channel trading only. But yeah, you guys get my thoughts on that. And it does translate to markets because that's why you saw meme coin mania. But Bitcoin has been the outperforming crypto. That's the point of that entire rant, essentially. So that's your monthly market structure. On the weekly, bands are red. They need to flip green. And that's what kicks off the big trends, as you can see over here. Flip green on this occasion led to a beautiful macro rally. Flip green on this occasion, after briefly going red, led to a beautiful macro rally. Two signals right there. Two entries. Beautiful. But while it's red, you avoid getting overexposed to the long side. That's why, as you guys saw, I've got that long at 84k, but only 25% of my portfolio is reallocated. 75% is still chilling in cash. I'll bring that chart up again. This is the reallocation I've made. You guys are in the Discord, of course. I've updated you guys. Everything I do, whether selling my Bitcoin at the highs or buying it back. So far, 25% allocated, 75% cash, because it's still a market where I want to maximize and still have some sort of defensiveness, because I still think it needs more time or price. Remember, two types of ways to bottom. That's what you're really looking at for BTC. So monthly charts, monthly market structures at 82k. That's a key level. As you can see, when you close below the monthly market structure, that's what leads to extended downside and a proper price capitulation. So that's the level to really watch. Many scenarios we can get, as I showed you today. So it's just about getting your exposure when you're seeing the signals, getting your exposure when you see the outperformance to the downside to the other macro markets, and getting exposure when you see cause and effect aligning for Bitcoin. That's when positioning is going to allow for this chart to break out. And it's going to happen inevitably. Going to happen eventually. It's just a matter of when. So lock in. Make sure you turn up every day. Don't quit, because that's when opportunity is peaking, when everyone starts quitting. Everyone was around when Bitcoin's at 120k, but you got to be the guy that's around when it's at 80. So that is Bitcoin. That's the high time frame analysis. Let's dive into the leverage positioning. So quick wrap up. One thing we're seeing again is the volume 24-hour, and it's a Friday right now, so a real trading day. Why is Ethereum so close to Bitcoin still when it's, you know, 20% of the size of its market cap? What is going on there in the market to have such high volumes trading on ETH relative to Bitcoin? It's just very strange, especially when ETH is going nowhere and it's just terrible price action. Is that a sign that liquidity is not back? Markets have not recovered yet? I think so. I want to see that stop because that never happens during the bullish periods. But looking at open interest, let's see. So we've had a nice build-up of open interest this cycle. If we check some kind of relative areas, so boom, that high over there, I'll mark that out, is equivalent to this high over here. Price is way below it. Open interest also below it. So that's healthy in terms of reset. So that's one thing. You've got the low over here. Open interest is above it. Equivalent low, price is above it. So again, not seeing signs of over leverage. I've had a nice wipe since that October 10th week over here where you had the largest notional liquidation event in crypto history. So that's where it gets a bit interesting. Open interest is below that, whereas price is also below that. But open interest is trying to recover. And if you actually go to a contract basis, you'll notice open interest is above it. This is in dollar terms. So in Bitcoin terms, OI is starting to recover a little bit. We are seeing the early signs of leverage coming back into the market, which is good. You actually need leverage to recover a market. People think it's just leverage that needs to be fully wiped 100%, but that would mean there's no interest in the market. Open interest literally means how much interest is in the futures market. And you need some to prop up a market. Yes, it can get euphoric, but you do also need it to rebuild and build the trends in the market. So overall, leverage not really offering anything too insightful. It's at a pretty stable spot. It's been wiped out. Just need time or a price-based capitulation and ETH volumes to not be so high because that's just strange that it's getting so much attention. I don't like that at all. So that's leverage positioning. Catalysts and risks. So 2026 ETF flows, quick wrap up on this. So the net flow is now plus 1.6 billion. Price is currently up 8.92% as I'm recording this. So interesting to see prices respecting the positive inflows now. So far so good for 2026 and the prospects for some sort of oversold rally to keep continuing. Of course, check out morning markets from yesterday for a bit of a lower time frame view of Bitcoin, sticking to the high time frames today for a bit of a different outlook to kind of also please some of you guys that trade purely high time frame. So far so good. Prices rising in line with ETF flows. That's what you want to see. That's harmony. So let's see if that can continue. Next week we've got CPI, not CPI and inflation data. That title's wrong. But anyway, you've got core PCE. So you do have inflation data. That's the Fed's preferred inflation gauge. You've got final GDP. That's the least impactful one because it's the least forward-looking one. But more interesting, you've got World Economic Forum annual meetings. You've got Trump speaking. So potential catalyst there to watch out for on Wednesday. Have your bingo cards ready to see if anything interesting gets spoken about, any volatility in the markets. But really, we got to start watching for presidents getting kidnapped. We're going into the weekend now, so that actually, all jokes aside, is the biggest risk right now with US, Iran. There's rumors about that. Could something heat up there? Who knows? That's going to be a catalyst for markets if it does, and maybe that's what gold's pricing in right now. So keep an eye out for that. And essentially, that is the weekly outlook wrapped up. So hope you guys enjoyed this one. Bit of a high time frame outlook, bunch of alpha in there. If you did, you find this educational, you find yourself learning, then the school might be the perfect place for you. Just drop me a Telegram message, first link in the description. Otherwise, I'll see you guys in the next one. GM.